in a high market right now, and things will change at some point. So appreciation isn't even a conversation when we're looking at deals. I'm assuming everything's going down 30% on a spreadsheet and preparing, myself mentally for looking at updated PFSs when that happens. But the true metric is the monthly net cash flow, and just based on like our DCR, like, debt coverage ratios and things like that, those mean a lot to me right now versus ROI. And even, our commercial banking partners and even private lenders, that's the biggest conversation where we get a lot of praise is, they're even seeing it. They're like, this is an unusual cash flow for, a 2-family, a 3-family, all that stuff. And what we're really doing is just taking, condemned value add properties, making them, I don't want to say class A, but class B plus, because they're not big complexes with gyms and, pools and that sort of things. There's all 2 to 4 units that are in very good areas and getting, market tenants there. And at the whole portfolio level now looking, we could cover debt service and expenses with less than 50% of units paying rent. So in a situation where things change like COVID and all of that,
Yeah.
we're literally to this day have not missed one payment through all of COVID-19 scare. And then and our personal stuff too, from having just that business model. And I know a lot of people that we're surrounded by can't make that same claim. And, when you're running at $100 a door or $200 a door, things go really sour quick. And then you have this big debt service to handle. And, long term, we're just looking at that net number. So we're going to slowly and methodically grow the portfolio to a position where, we can pick and choose if we want to work anymore is ultimately the end game. But now we're in the fun stage of getting it there. So
absolutely. Let me unpack a couple of things there for those that are listening and going, man, I love it, but he said a couple of things I might not know what they mean. So he mentioned he's in a good position with the properties if there was a 30% pullback in values, which basically means if there's a shift in the market, the stuff that you're sitting at today, the value today could go down 30%. And while that would suck, and you would look at your PFS, personal financial statement, and there would be a lower value to your assets, the reality is they cash flow. So you would continue on exactly what the financially every month they're doing exactly the same performance, but top line, you look across the board and say, well, we've got a little bit less in value, but you're not selling them. So that's a distinct difference than a lot of the mentality that I see right now, which is, you know what, I got to get this net worth up to this huge number, and the net worth doesn't mean anything because it's all based off of the market value. And then the cash flow, they're spending $200 a month on every door. And once that goes south and your value's gone, well, now you don't have a way out.